Hello and welcome to the day ahead. It is Thursday, May 12th. I'm Andrew Gagan. Well, let's get to the focus overnight. Inflation. Stocks on Wall Street taking a hit and Treasury yields sliding in a volatile session after April's core consumer price index read came in hotter than expected. The headline figure, however, did slow marginally as gas prices eased, rising 0.3% last month, the smallest gain since last August. And in sharp contrast to the 1.2% month-to-month surge in March, which was the largest advance since September 2005. Well, taking a closer look, ex-food and energy, the numbers came in much hotter than expected and an acceleration from the previous month to 0.6% versus 0.3%. Looking at the components, on a month-over-month basis, there were lots of deceleration, including energy, electricity, food at home, medical care and apparel. Natural gas, utilities and new cars were higher. Well, the tech-heavy Nasdaq, the lead laggard, as interest rate sensitive growth sectors and consumer discretionary underperformed the rest of the market. The benchmark 10-year yield falling to the lowest level in nearly a week in the run-up to the data, but spiked back to a 3-year peak on the release before ending again below that 3% handle. Well, the US dollar immediately strengthened in response to the US inflation numbers on expectations that the Fed will need to be more aggressive with its monetary tightening. The greenback has appreciated more than 8% this year, with investors seeking the safe haven amid concerns of rising rates and slowing economic growth. Atlanta Fed President Raphael Bostic saying that the rising interest rates at home mortgages and US Treasury bonds shows the central bank remains credible in its attempts to thwart rising inflation. Well, the Fed will have more inflation data to consider tonight, with the producer price index for April expected to see a monthly increase of 0.5%, down from the 1.4% jump in March. Well, the Aussie dollar falling from highs near 70.5 US cents, currently sitting just above 69.5 US cents. Meanwhile, the euro gaining on expectations that the European Central Bank will raise its benchmark interest rate in July for the first time in more than a decade to fight record high inflation there. ECB President Christine Lagarde saying that inflation is likely to be at or above its target through their forecast period, strengthening the case for ending accommodative policy. And the inflation report triggered more selling in cryptocurrencies, with Bitcoin again falling below $30,000, now approaching $29,000. Altcoins have seen even greater falls, with Ethereum approaching $2,000, having lost more than 30% of its value over the past 7 days. Well, sour investor sentiment is likely to see a lower opening on the local share market, with SPY futures currently off just shy of 0.5%. Commodity prices, well, they've staged a reversal, with news COVID infections in China have dropped. This as the World Health Organization says China's zero COVID policy is unsustainable. And in the US, the Energy Information Administration reporting that distillate inventories fell to their lowest level since 2005. Brent crude up close to 5% to $107 a barrel. Iron ore futures gaining 3% to $134 a tonne on the prospect that demand from China is likely to improve, and base metal prices were mostly higher, with the gold futures price up by 0.7% to $1,853 an ounce. Just locally, CBA third quarter cash profit a beat on estimates in its latest results, coming in at $2.4 billion for the quarter to March, thanks to solid growth in lending and lower costs, which more than offset margin pressures from rising competition. The lender didn't disclose the net interest margin figure, but saying it was under pressure during the quarter. It did, however, clock a credit impairment benefit of $48 million due to improving economic conditions in the country. And that is your day ahead. See you again tomorrow.